Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, the 20th of September, 2007. The market's closed, and we had a little bit of a pullback here today, which shouldn't have come as any surprise. The market had gotten a little extended here the last couple days, and we saw the sellers starting to gain control a little bit yesterday on that 1 minute time frame. When I say gain control of that one-day trend, that's all. And today the spiders were down $1.07. That was good for a 0.70% loss, and you can see here that bullishly it came on declining volume. So it's good to see the volume diminishing on the pullbacks in here. Someone asked me yesterday, do I think this move has the potential to make it to new highs? Yes, I do. They're very close, but let's just continue to let the market tell us what to do here. Looking at a 10-minute time frame, you can see again that on Monday we had a bounce off that rising 5-day moving average. The market from the point of the pre-Fed volatility right here, that low, to yesterday's high, market came in so far 38.2%. Really not much of a pullback at all so far. Very shallow, and we're seeing diminishing volume. We're seeing a real reluctance for the longs to give up here, and it shows that there's an underlying bid in this market. Most likely that's due to shorts who are trying to minimize some losses in here. Let's not call it a bottom though, because if you look at a shorter term time frame, you can see that this level here is going to be important for the next session or so. Above 152.75 is about where you would expect to see a little bit of resistance right now. That is the prior support of the last 2 days. And looking at a 2-day, well, let's take a look at a 3-day chart. On this 3-day chart, I have a VWAP moving average, and you see what it shows is this is the average price the spiders have traded at over the last 3 days. The market came down and tested that level today and found a little bit of support. Now, if we take a look at the VWAP of the last 2 days, let's just do it with a line here rather than moving average. You can see that the average price of the last 2 days has been 153.25. So getting back above that level, I think, would be bullish, but right now I think that we're still in consolidative mode. We do want to give the benefit of the doubt to the buyers here. We've got a rising 5-day moving average, but this pullback could still maybe come back down towards the 151.5. A 50% retracement wouldn't be unusual or unhealthy for this market. So we've got a real nice looking setup though still here on this 30-minute time frame. So the market continues to act good. That 150 level is where we had the previous resistance. I think it's still kind of far away, but even if it was to come all the way down to that 150 level, it would still be considered bullish. But I suspect that we're probably not going to see it come down that far. The market is kind of coming in grudgingly so far, and it's showing that that there are buyers still out there. The semiconductors were where those buyers were today. The SMH was up 10 cents or 0.26%. It's the only market of the ones that we're looking at that was positive today. So it did outperform on a relative basis. It's still holding above this 50-day moving average. That's 2 days in a row now that we've seen that. Don't want to read too much into it because it is declining, and it most likely indicates to me that we're going to see more neutral environment here in the semiconductors. The 37.40 is still, I think, probably it's your do or die level for this rally to hold in the semiconductors. We've got some resistance up at about 38.50, so breaking above that level would be bullish. Maybe we'll come in a little bit deeper and build a shoulder, a right shoulder to go with this what might end up being a left shoulder and a head right here that I'm drawing in right now. Again, let's not read too much into that, but we do have a rising 5-day moving average. That does give us reason for hope that it can continue higher, but right now it's more neutral than anything. You see these moving averages crossing back and forth, and we've got this 38.50 level that breaking above that would be, I think, the catalyst for another push higher, maybe up towards this $39.5 to even $40 level. So it's still mixed picture for overall for the semiconductors. The IWM is still remaining very bullish. Not very bullish, but it's bullishly holding on to its gains of the last couple days and holding above that 200-day moving average. You can see intraday it did come down and test that level, so it was able to hold there. And this market finished with a loss of 1%. So it was down more today, but percentage-wise it's been up more lately too. Let's take a look at it on a Fibonacci basis to kind of keep it in perspective so that we can compare apples to apples. So in here we can see that it's just about the same exact type of percentage retracement as we saw in the spiders, in that it came down about 38.2%, a little bit deeper than that. But it did test this level here, which was the prior resistance. So let's take a look at that on the 30-minute time frame, because we can see it a little bit more clearly in here, that this prior level of resistance at about the 80-20, 80-30 level that had been tested so many times is now looking like perhaps it's going to provide some support for this market. The 3-day VWAP was tested in here as well. It closed back above that, meaning that the average price since the Federal Reserve cut interest rates on Tuesday has been right at about this level, and that still gives the bulls a level of comfort, basically, in this market. We do have a rising 5-day moving average. That's a positive. On the daily time frame, let's just see if it can continue to hold above this 80 level and close above it for the week. Would be very bullish. Tomorrow, obviously, is options expiration day as well, so that may play a factor into that 80 strike, but it's looking like it ought to close above $80. So you can see, look at the volume too here this week, and it's only Thursday. So we are comparing to a holiday shortened week 2 weeks ago as well. But overall, the IWM is showing a much more bullish look, obviously, than it has in the last 8 weeks or so. This level is prior support. That's where it seems as though there's a little bit of resistance up here. So I think clearing 8150 would be the best level of resistance to get past to make it look more bullish. But a consolidation here for the next 3 or 4 days, and this level would actually be very bullish as well. As long as the market just doesn't break down and trap everyone here, then I think it's going to be able to build for a bigger rally. And once again, I don't know anyone who paid those prices on the Q, so I'm going to just change the scaling so we can look at it what I think is more realistic of what's happened here. But these, you know, the Qs were off today by 14 cents. It's only a 0.28% retracement. So after such a big move, you can see that you know, the market continues to hold bullishly. The important level of resistance that was broken on Tuesday was 49.40. That will continue to be the do-or-die level for this market. We've got a rising 5-day moving average, and the daily time frame just is the most bullish of these markets too. We've got the rising 10, 20, and 50-day moving average. So this market continues to be the strongest. The path of least resistance is clearly higher in here. The 3-day VWAP was tested in the Qs as well. So the average price since the Federal Reserve cut continues to hold up. Maybe saw a little bit of resistance in here at about $50 a share. I don't really think that's too important to look at. I think back above 50.30 though, that's where some short sellers might get a little uncomfortable. Maybe we'll see a little bit more further upside. But for now, it's just in consolidation mode after that big rally, and the market continues to act real strong right now.